welcome to Cannasure's first webinar of 2022. Thanks for all who have joined us today. Wanted to share that we had put a 2022 agency survey together and had received a tremendous amount of feedback. And one of the areas critically that we took to heart was all the feedback on us, Cannasure, being more visible, providing more information to our agent partners, and to be more educational. So to that end, we decided to put together today's webinar, a couple of great panelists, program managers and underwriters that support our brokerage unit, which we'll speak of more in a second. The brokerage unit is designed to support the MGA program of Cannasure, but it's also there to add critically needed ancillary coverages for the cannabis industry. I'm going to let each of our special guests on our panel introduce themselves in a second, especially as they launch into their presentation. But I wanted to extend a heartfelt thank you to all of the folks who joined us today. They work tremendously hard for us behind the scenes. And we know as we all are very focused on X dates and opportunities and proposals, that we put a lot of pressure on all the folks who are on the panel today. So they feel the pressure that we give to them, that you give to us, and they've been very supportive and responsive over the last year and a half that we've had them working on behalf of Cannasure's and brokerage unit. Before I turn over the presentation, I wanted to make 2 points pretty clear. The reason for our success in the brokerage unit is because of Cannasure's MGA program. We have an industry-leading $40 million of property capacity in the MGA program. We have $5 million of products liability coverage and up to $6 million of premises coverage, and a number of different ancillary coverages within the MGA program that extend coverage, but only to the point of a package. So we need our brokerage unit to complement the different coverages available in the MGA program. And those are programs like commercial auto, which will be discussed by Joy LaFrance at 180 and international excess. We're going to talk about stock throughput from Matt Lopez at Foray. We're going to talk about crime coverage from Berkley, and that'll be Matt McNamara. We're going to have Reigan Deleeuw talking about workers' compensation, and that's that cool arrow, I guess, logo that we have on the panel. And then I'll finalize the conversation with Parametric Crop coverage. But these are all coverages that are in our MGA program. There's a number of other coverages that we offer, but these are the top 5 that we wanted to present today. And the last point before we kick it off is that we will have a Q&A session to finish. So in the Zoom panel down below on your screen, you'll see a Q&A button. If you guys can share questions as each of the presenters conclude or do their presentation, we'll hold all questions till the end. And for any question that we don't get answered, you'll see my contact information on the final screen, and we'll make sure that we bring all questions forward to an answer with all of our participants who are checking out our webinar today. We're going to try to get as many questions from each of the panelists, and hopefully it'll all be a successful presentation as we go. So again, thank you for joining us, and let's kick it off with Matt Lopez at Foray talking about cargo and stock throughput.
Thank you very much, Jim. I appreciate the introduction and certainly the partnership. We are glad to be helping your team, especially with cargo and stock throughput. At Foray, I'm head of insurance brokerage services. And so we'll get on to the rest of the presentation. So next slide. For those of you not familiar with stock throughput, it's a bit new to the cannabis industry. In the normal world of insurance, stock throughput is used very frequently with businesses that have a robust supply chain. Typically, we'll see them use multiple modes of transportation to include boats, trucks, trains. Some may even have international exposure. And so what it does is it seamlessly provides coverage for the cargo while in transit and then while in storage. So with the hard work of the team at Foray and with Jim's help, we've been able to put together a stock throughput program for the cannabis industry. Typically, what this will cover is it'll cover biomass, finished stock, and work in progress, and then it'll cover the transit of that. So typically, we've seen our most successful accounts be vertically integrated operations, cultivators, distributors, manufacturers, and transporters. When it's retail only, it's a little bit more difficult for us, but it's certainly worth a conversation. So if you think it's a fit, certainly give Jim and us a call and we could discuss it and give you a quick answer. We've had great success writing both single states and multi-states. The benefit of stock throughput policy is that we do have the ability to write multiple states on a single policy. What we'll do is we'll just insert language which allows for only the transport of cannabis within that state, so intrastate. This program is available wherever cannabis is medically and recreational legal. So I believe I forget the number now, but it's a majority of the United States. Great thing about the program is this is A-rated security through various syndicates of Lloyd and through international insurers. Additionally, what the stock throughput program allows us to do is to remove it allows us not to have a separate cargo policy. So the stock throughput program will cover the inventory while in storage and also the cargo. So no monoline cargo policy. And then this does work in conjunction with Cannasure's program. So Cannasure would write the package and then we'd work closely with Cannasure's underwriting team to remove that inventory and place it onto our program. So it's a great complementary program to each other. The submission process is pretty straightforward. Typically, whatever you send Cannasure is what we need. So we'll need a cannabis application, SOV. If you have a cargo application, it certainly helps. It won't stop the process at all. Typically, it'll be a conversation through the underwriting team as to what more is needed. It's pretty seamless. And then the big one is security details on the vehicles transporting the cannabis and at the facility in general. I would say a commonality is that most of all the submissions have pretty robust security. So it's always worth a great conversation. We try and make it as seamlessly as possible to provide lots of value added to the current Cannasure offering. Next slide, please. Here's a few high-level details of the program. So the way stock throughput works, again, we have cargo, and in regards to cargo, we've written up to 2 million in limits. I'd say about the average size thus far, or the average amount of cannabis we could stick into a Mercedes Sprinter van or Ford Transit van tends to be $1 million. In the case where we have larger vehicles, we could certainly accommodate larger limits. And then the second half of the stock throughput program would be the location in which it's stored. So this limit that you see, the any one named location, that's the limit that would come off Cannasure's capacity and allow them to deploy capacity elsewhere. So say a building, BI, BPP, TIB. This is fantastic as we start to see larger operations with more robust TIB limits. This really helps us really aggregate more capacity. So typically our average risk right now is 7 million per any one location. We do have the capacity to write up to 25 million, depending on underwriting. So it's a great value add to Jim's program. One of the unique things about cargo stock throughput is that it does include CAT coverage or catastrophe coverage. As of now, I think there's limited wording or non-existent wording for CAT coverage in terms of, well, wind, flood, and earthquake. Typically that's excluded all out or a high deductible. Our deductibles tend to be much lower. Only in very few occasions will we really see it spike, but in general, they tend to be pretty agreeable. We certainly have the capacity to write in Florida and other wind-prone states, and that's just because of the nature of stock throughput. The cargo transits most of the world, of course not in the terms of cannabis, but in normal stock throughput, it definitely goes through CAT country, I suppose. Then we could write on a primary or contingent cargo basis. Primary is when we're moving when the insured's moving their own goods. Contingent cargo is when a third party is moving it on behalf of the insured, such as a third party cannabis transporter. Instead of relying on that transporter's coverage, which typically, as we've seen $100,000 limits, we've seen 250 on average, or even 500,000. We could wrap around their coverage or just write it on a primary basis to have our own limits. This is fantastic for us because when our insured has a loss, they could use our insurance to recover their loss instead of having to get into a contractual argument with their transporter. So this gives us a little bit more consistency in the space and allows us to indemnify ourselves a little quicker, or allows our insured to indemnify themselves a lot quicker than having to bring their general counsel into it. Another big plus of the program is the basis evaluation. We offer it at selling price as a starting basis. This is great because it can help offset some of the BI expense, so that could fall off. And we could, the other BI could, go to opening up the business as soon as possible. So this gives us a little bit more of a cushion in terms of selling price. And lastly, when we combine this in conjunction with Cannasure's program, it can offer significant savings with the rating basis of a stock throughput policy, with Cannasure writing the package. So the package being the property and all types of the property. So that combined will give us a lot of savings in comparison to another MGA, name any major one that's writing cannabis. So the hybrid model with the stock throughput and Cannasure's package program offers great strategic significant savings, and it's a product that's not being offered elsewhere as well. So it really gives us a great arrow in our quiver. So that's a quick highlight of marine cargo and stock throughput. If you have any questions, feel free to send a note over the chat, or we could certainly address it at the Q&A, but look forward to hearing back from everyone.
Good afternoon, everyone. I'm Joy LaFrance. I'm the Chief Underwriting Officer of 180 Intermediaries, and I also head the Transportation Division for International Access, which is a part of 180 as well. So I'm going to do some highlights. Thank you for moving the slide. I know all of us can read, and I know you're going to get a copy of this presentation. So I want to hit on just some key items as we're having the discussion today. What you have listed on this first slide is the carriers that we utilize. You'll see Berkley, Knight, which is non-admitted, and then RLI. The rating is in here. Please note that based on the characteristics and location of the risk is what really helps us determine what carrier we're going to place or try to attempt to get you indication and or a quote for. We can move to the next slide, please. How we're doing this here is we're listing first Berkley so that you have an idea of how we are writing the policy. You'll notice it's a symbol 7, which is a scheduled auto, which means we are going to be doing this on a business auto form. We do the UMUIM at the state minimum, PIP, MedPay, whatever's required for that state. And typically there's always a $2,500 bodily injury property damage deductible on our owned auto, which is your asset-based fleets, and on our non-owned, which would be your employees and or independent contractors that are delivering or moving goods on your behalf. We also include physical damage with all the carriers that we mentioned, which is also a symbol 7. So all of your units are going to be scheduled. Our minimum deductible is $2,500, and the minimum premiums listed there at $750 for that coverage part. Hired not known is key here, and I think that's where the most confusion is that we have when we receive a submission, because they don't realize that an employee out there, if you're not scheduling their vehicle and they haven't leased it back to you, you really do need that hired and non-owned auto coverage. On top of that, if your insured is actually renting any units, you need to make sure that that is advised under the section of the application. We do allow for rentals, but we do ask for how often, how frequent, the GVW size, but it is something that we can rate upon. If you answer no, we will exclude that rental coverage because we do not want to pick up an exposure that we did not contemplate. So you'll notice on the slide here, it does show what the minimum premium is. And you'll notice on rentals, we do increase the deductible from $2,500 to $5,000 for bodily injury, property damage, and physical damage. And the reason for that primarily is rental vehicles are not as familiar to the operators as units that are scheduled on a fleet. Please move to the next slide. And here's the MVR guidelines. I'm not going to go through them all. It's pretty simple. You've got the grid. It does describe what major violations are. We do not describe minor, so it's anything that is minor is what's not major. I think that makes it pretty simple. Next slide, please. We do have a minimum age limit of 21 years of age. They must have their driver's license for a minimum of 3 years. So when we say driving experience, it is not in this industry necessarily, although it is preferred for new ventures that they have some experience in the industry or some logistics experience, especially if they're doing deliveries in residential areas. But it's really more about them having a driver's license for 3 years. You'll note that we do denote that they must have a proper CDL, and they must have their CDL for 2 years for any unit that is $25,999 or greater. If you're over the age of 75, we do require the long form DOT medical. We do require motor vehicle reports, excuse me, and they must be valued within 89 days of the effective date. All submissions must include a full driver's list, and in there you'll notice that we do ask if they're full-time or part-time. Next slide, please. I don't know why I'm losing my voice here. Towing coverage, we can do up to 50,000. Rental reimbursement at your $75 per day, up to a max of 30 days. We did list that the minimum is $135 charge per unit for that coverage. We also offer the loan lease gap, broaden pollution, waiver of subrogation, and primary non-contributory. And they are both optional on the GL and the auto liability. Next slide, please. These are the major carrier differences that we were trying to outline. So Knight writes on a motor carrier form. Again, 67 is still a scheduled auto. They do very similar things as Berkley and RLI do, which is they do the UM at state minimum, same with the MedPay and the PIP. The difference with Knight is it is a named driver policy, which means they are going to require that every time there's a driver hired, that that driver information is submitted along with the motor vehicle report so that underwriting can approve it. There are no liability deductibles with Knight, and we cannot do a Form E filing with Knight. For all of our carriers, they do state that you cannot cross state lines. So please understand that this has to be interstate only, like you have to stay intrastate in your state, not interstate. Next slide, please. Submission requirements. So this is great. You can see what it says. We do ask for complete submissions, but if you need an indication, because you don't know if you actually want to complete all this information, which I understand if you want to just see and test where we're going to be and where it may fit. The minimum requirements are loss runs and the vehicle list with the garaging area so that we can look at where it may fit and with what carrier. After that, we would provide you an indication, which is going to be rough, right? Because we don't have a full submission. Indications cannot be bound. We need the full information to actually provide you a quote. Couple things that I want to mention here as well. We do not and will not accept any employee armed guards. They must be third party and they must have their own policies and always add our insured as an additional insured on their policy. Let's see. I think that's really about it. I think that sums it up. I don't even think I have another slide, but if I do, would you please move it? I think that was all. But anyway, we really look forward to working with all of you. We're really excited to team up with Cannasure and be able to offer our amazing products and hope to speak to you guys again in the future. Have a great day.
Okay. Thanks, Dana. Thanks, Jim. Appreciate you guys putting this together. My name is Matt McNamara. I am the commercial product leader and also the East Region manager for Berkley Crime. Next slide. So I assume everyone on today has probably had some type of exposure to crime insurance, whether it's you broke it, you know what it is, you've underwritten it. So you're probably going to look at this and say, hey, this seems fairly familiar. And that's the reason for that is that it is. What is crime insurance? It's a policy that covers specific crime-related losses to specific company assets. And you'll notice if you are familiar with this, that the coverages included are very similar to a standard commercial crime policy, and we in fact use a standard ISO commercial crime policy. So those coverages include employee theft, forgery or alteration, inside the premises, which is theft of money and securities, and then inside the premises, robbery or safe burglary of other property, which is where the cannabis would kick in. Outside the premises, so in there you can kind of think in transit, messenger, someone transferring either money or the cannabis, computer and funds transfer fraud, and then money orders and counterfeit currency. Next slide, please. So why do I need it? It's honestly fairly self-explanatory. But one of the key components to us getting into this industry, doing our research prior to launching the product, a key stat that really stuck out to us, which we were frankly shocked about, was that 90% of financial loss in the cannabis industry can be attributed to employee theft. That was one of the first things that we discovered when we endeavored to create this product, and one of the main reasons why we felt like we needed it outside of the obvious, which would be that you're an easy crime target. If you want to steal money, you go to a bank, right? If you want to steal money and you want to steal a product that's easily sellable on a street, you go to a dispensary. So you're a very soft target for crime, both within the cash and the cannabis, which leads really to the next key component is that it's a protection against catastrophic loss. I think you're probably, if you're a dispensary owner, you're not so concerned about, $100 slipping out of your register, or even maybe even $1,000 or $5,000. But if you come to your shop one day, you go to open up your safe and all of your cannabis is gone, all of your money is gone, guess what? You're not going to be able to open the doors that day. So this really, kicks in for those types of losses, excess of the deductible that, not only can hurt your business, but potentially shut it down. Our target industries at this point are recreational and medical dispensaries, distributors, manufacturers, growers, vertically integrated cannabis companies. I know this is a short list, but we really don't have any industry or any type of cannabis company that we specifically exclude right now. We pretty much look at every risk on an as-is basis. And we underwrite it to the exposures that exist at the time. So although this is a smaller list, the list could go on forever, really depending on what you do within the industry. So there are no targeted classes of business that we specifically exclude at this time. Next slide, please. So why would you go with Berkley Crime? What's the reason you would do that? Well, we are trusted experts. We only handle crime insurance out of my group. We're a monoline shop. We eat, breathe, sleep crime insurance day in and day out. For the past 100 or so years, crime insurance has been a thing, but cannabis is relatively new within our industry. There's really only one other carrier that is offering it right now. So we like to think of ourselves as a pioneer in the industry and trying to come up with creative solutions for both the product and industry as a whole. We are admitted in all states where cannabis is legalized. That goes for both medicinal and recreational. So essentially, anywhere there is cannabis, we can provide coverage for it. Along with that, we are admitted paper. We have an A+ rating for both S&P and AM Best. I think up until the past probably year and a half, if you wanted crime insurance in the United States, it was going to be on excess and surplus lines. So you were going to have non-admitted paper. So we look at that as certainly a huge add. Dedicated claim specialists, something that I think is very important in our world. We do not outsource our claims. Our claims are done in-house, in division. We work with these people on a daily basis. I can tell you whenever a claim comes in, we are required within 3 days to have a call set up with both the underwriter, the claim specialist, and anyone else involved in the account. And that's really, it has to be done for our underwriting guidelines, within 72 hours of a claim coming in. So you're going to have both the underwriter and the claim specialist working on this, which I think maybe differs from certain insurance companies that outsource those claims to another department and you never hear back and the underwriter doesn't know what's going on. At least, especially with things like this, you're not dealing with, in general, massive Fortune 500 companies. You may be dealing with an owner where this is their lifeblood and they need answers pretty quickly. So I think that's a very, very important point into what we do. We have up to 2 million in limits available, which is currently the highest in the market. We try to be competitive in the pricing, and we certainly work with our agents on that. We know it's not a one size fits all. We know that there may be some discrepancy in terms of deductible or limit or pricing. But what we try to do is find a mutually beneficial fit. So if the price is too high, maybe we can work on the deductible side. Maybe we can work on the limit side. It's really more of a discussion. I look at it between myself, the agent, and even the insured. And I think the final bullet point, and what I really want to stress, is the comprehensive coverage. Right now, we are currently the only carrier that is actually providing coverage for the cannabis and not just money and securities. And the reason I think this is so important is that if you're running a dispensary and you walk in to open up your store one day and there's money out of the safe, that's a really bad situation, but you can probably open up your store because you have your inventory. If you come in one day and the money's there, but the inventory is completely gone, you're not opening up that day. And if you potentially have a huge amount of your inventory on time at one hand or a huge amount of your cash on time at one hand, let's keep in mind that not all dispensaries are going to have access to the traditional banking system. So as we have found out, there's many times that there's hundreds of thousands of dollars that are sitting in a safe within the premises, or there's hundreds of thousands of dollars or up to millions of dollars worth of inventory in the premises. And if you don't have insurance for this stuff and you are robbed or an employee does steal it, and you come in one day and it's gone, you may have to close your business. So we feel like this is a really important product in the market. Jim has our application. That's really all we need completed to get started. It's a cannabis specific app. So it's going to ask questions on there about your opening and your closing procedures, what type of cannabis exposures you have, or what's your inventory amount, what's your cash amount. We'll go through, what types of safes you're using, what types of vaults you're using, but it's all included within the application. So, and really we just get that and then we're rolling. So I appreciate the time. I know we have the chat open, so any questions, please shoot them over and I'll answer them at the end of this. All set.
Hello, I'm Reigan Deleeuw. I'm from Benchmark Insurance Company. I'm located in the Provo, Utah office. I've been with the company 10 years. I'm the senior underwriter and I am the cannabis specialist for our company. We can go on to the next slide. So this is who we are and what we do. I'm going to keep it pretty broad since we do more than just the cannabis industry, but we are A-rated carrier as well. We have a broad appetite outside of the cannabis world. We have sister companies that offer insurances such as property and casualty, accident health, and some other things like general liability. We have lots of program partners and captives, so there are multiple options throughout our company. And we can go ahead and move on to the next slide. So as far as our cannabis operations go, we operate on 2 separate papers. Both, like I mentioned, are A-rated with AM Best. We are appointed in 49 of the 50 states. The only state that we cannot provide coverage to is the state of New York. And though, of course, some states are more favorable than others. Some states like Oregon and California are more difficult, but we do have access to those states. We also have in-house claims handling for all of our states. We provide in-house loss control and OSHA training to all clients. We have an easy online claims handling website by state where any insured can log in, select their state, submit a claim online, and they will get a response within 24 hours from one of our claims handlers. Part of our loss control program, aside from the typical assistance with inspections and written safety plans, we also implemented something over the last 2 years called Safety Bucks, which has been pretty big in the cannabis industry over the last year. What it is it's a percentage of the insured's premium that we offer back to them as reimbursement for them to focus on implementing safety in their company. So for example, if they are opening a new cultivation facility and they need to make the premises, more safe by fixing floors or installing hand railings or anything like that. They can buy those materials, have those installed. They can submit their receipts back to our company, and we will reimburse them that money. Same with PPE, anything they need in that aspect, even down to company parties or what we like to call pizza parties for fun. Anything to incentivize the employees to be safe on the job, we're happy to help implement those as well. And it's an offset to some of the premiums that they may be paying. So it's a way to get some money back in their pockets. There's a lot of access to our loss control. We really focus on that, especially in the cannabis industry, when it comes to driving exposures and extraction operations. That being said, every submission comes directly to your underwriter. In this case, anything coming from Cannasure would be running across my desk, would be handled by myself personally. Average quote turnaround time is 3 to 5 days with a full submission that includes a loss run and a supplemental application and an Accord 130. We can also do rush submissions. So if you need something turned around today, we can do the same thing, whether that's a formal quote or a pricing indication. We do not require loss runs if they are new in business. We just need a no known loss letter to be able to bind. So there's some flexibility on the submission side there as well. And you can go ahead and move to the next slide. So let's just get a little bit more into the cannabis. Like I said, we have all 50 states. There's a lot of changing that's going on, where it's recreational, where it's medical, where certain class codes apply and which ones don't. So this is changing rapidly. We do keep up on that, so we're able to provide the best coverages and updates for you. We currently write 300 cannabis accounts across the nation. We don't have any minimums or maximums at this time, whether it's a $250 policy to multi-million. We're able to consider it that way. We'll consider dispensaries, cultivations, fully integrated operations. We can do delivery, extraction, any of those. They're all open for us. We don't have any restrictions when it comes to cannabis applications that way. We also know that the banking for cannabis companies can be a little bit difficult at times. So we do have a lot of flexible payment plans and options, whether that's payroll reporting, installment, ACH, wire transfers, credit cards, anything like that, anything that we can do to help assist that way. We have that availability as well. So, and I believe that's my last slide also.
Thanks a bunch, Reigan. I know it's a little bit hard to hear you, but since we have a couple extra minutes, let me jump in and say the success we've had with Benchmark and Reigan specifically. We've done a number of different accounts in a number of different states, both monoline and multi-state. Some of our largest workers' comp policies are multi-state operators across 4 to 5 different states, and that's just been a godsend to complement the Cannasure MGA program. The one thing I would tell you about Benchmark, especially that Safety Bucks presentation that Reigan just shared, is that that's a way for us to help the safety and the risk management programs within a cannabis operator to effectively give back to the firm when they're doing things like implementing safety programs, needing to have outside consultation that we get reimbursed based on that percentage of premium. It's a way of promoting safety culture within the organization. It's really gone a long ways to not just provide workers' comp for cannabis as an afterthought. It's really a great way of helping the business be as safe as possible on behalf of their employees. We've done a number of accounts that we, let's say, add California, Nevada, Arizona on a single policy. We've done a number of other multi-state policies as mentioned. So it's been fantastic partnership in writing workers' compensation with Reigan's firm. So thank you for that, Reigan. I will jump in and conclude with parametric crop coverage. Most importantly, parametric crop coverage is for outdoor crop. And we know that that's been a difficult find in the marketplace. And the thing that's changed recently is that we can now do cannabis as well as hemp. When we first launched this program about a year ago or so, we were only able to provide hemp coverage outdoors in any or all states. And you can imagine the amount of questions that we received on when can you do cannabis, recreational cannabis, medical cannabis, and the marketplace has opened up for us. And we've been able to not only get quotes for cannabis, but we bound a couple of accounts in the cannabis space after putting so much emphasis on hemp. But the big thing with parametric crop coverage, as the first point indicates here, is that it's guaranteed financial protection. And the point there is that it's a contract, just like a typical other insurance contract. We're specifying the exact weather event that we're trying to insure for. And you'll see as we move forward on the slides, not quite yet, that there's very specific data sources. And what I held back was the exact way of measuring a claim. I'll give you an instance or two when I hit the hail in a second, but because it is so exact, I call this the science of insurance, because it is so specific to a weather event that there's no question. And that's why at the end of the day, claims are paid out very quickly, because either you had more rain than anticipated, or you had an intense hailstorm, or you had a fire, or you didn't. So it's a pretty black and white coverage form. And that's why we talk about the very quick ability to provide contingency after days of loss. We know that someone who loses their crop is going to need to, re-till their soil, plant seeds, and make sure that they have a chance to gain that revenue back for what they just lost. The science of parametric crop coverage allows a really tremendous amount of safety, the safety of sleep at night. But more importantly, what we have had in the reality of providing this coverage is the collateralization from banks and the lending community. There's been a number of customers that have come to us with a requirement from their bank or their lending institution saying that we have to collateralize the amount that we have put out for the amount of crop seed coverage, call it what you will. What we've been able to do is provide the parametric crop coverage form, so we have the ability to provide that collateralization for our customer. It's wonderful when you, on the agency side, bring forward a request for quote because the client wants to have coverage, but when they need to have coverage because of collateralization, we've been able to respond to that very promptly. Next slide, please. There's actually 8 covered perils that we have in this program. I left off wind. I don't know how I did that, but what's important here is that the customer, with your assistance at the agency and brokerage level, can share with us what covered perils you seek to have covered in this policy. Our average is between 2 and 3 perils on a single policy. And I'll speak to in a second how you can stagger some of those coverages. But at the end of the day, what we're seeing is that there's a rate structure per peril that we can share. It's a ballpark, but in general, hail is going to run between, let's say, 5 and 8% of the limit of insurance as the premium quote, and about the balance of the perils run about 2 to 3%. So as an example, let's say we had a $4 million crop field that was seeking coverage, and you wanted to have 2 perils covered that were, let's go with excess rain and wildfire. Using a estimation of 2 points of premium for each of those perils, which would be 4 points times a $4 million limit of liability, limit of crop coverage, that's $160,000 of premium. So just give you an example of how the math works for parametric crop coverage. Shortly, we'll talk about some of the ways that we have additional fees and data sources and sensors, but gives you an idea that it's, a typical cost of insurance is around 2 to 3% in our world, and and parametric crop coverage seems to run in that same vein. Next slide. To put a submission together, it's really simple. We created effectively like a 1-page app for everybody when they want to pursue a crop quote. And really all you're doing is letting us know the exact location. Like we literally ask, can you give us latitude and longitude for the field? You can give us an address and just do a circle on a Google map picture. We're going to ask you what is the growing season or the risk period. Sometimes it's a full year because you're in a climate that allows year-round grow. Sometimes if it's the Midwest, it's a 4 or 5 month grow season. So it doesn't make a difference in the way the premium goes. It makes a complete difference in when the weather pattern could be more at risk for the crop. And we'll speak to that in a second. One way of tackling crop coverage is staggering the perils based on the grow season. So let's say that you're on the front end in the rainy season in, let's say, March, April, May, you might have excess water, excess rain as a covered peril on the front end. You might know that you have a wildfire season in June, July, August. That might be another peril. And then towards the back end of the crop, you might bring frost forward for September, October, November. So there's a way of looking at a grow season and the different seasons that are in terms of the weather patterns and the calendar. So there's ways of tackling this much more creatively than we had anticipated. So at the end of the day, you're going to share with us what are those crop values and grow seasons in your submission. You're going to tell us the desired perils. And that's about and the value of the crop right there. And that's about the extent of a submission. It's a single one page. We have literally laughed at our ability to scratch up a napkin and say to our broker partner, does this work? Can you give us a head start on this? And then they literally will pursue this. Now, we don't want you to put this on a napkin. We actually have a nice little one pager for you to complete on the Parametric Crop form, but it's a very simple quoting process in terms of the application you submit. Next slide, please. So I mentioned sensors and fees. In the hail peril, we actually have a physical sensor that has to be installed. And I think it's about a $3,000 or $4,000 fee per sensor. So we'll let you know what those dollars are. But the reality is we have to measure the intensity of the storm. And the only way to do it is with this external sensor. And that ultimately will measure the size of the hailstone as well as the frequency of the storm. And we'll eventually share with you charts on how the claims activity works out. If the hailstone is the size of a nickel versus the size of a quarter versus the size of a golf ball versus the size of a softball, that triggers coverages in different levels. So we'll share how that works at the end of the day. For tornadoes and cyclones, the data source is the National Oceanic and Atmospheric Administration source, and they use the enhanced Fujita scale. The enhanced Fujita scale is basically measuring wind speed for a tornado or cyclone. There's, I think, 1 through 5, and the data source will tell us exactly the intensity of that storm and whether coverage was triggered. And again, that goes to that science of this. It's not an art. It's not a guess. It's very specific to a data source. Rainfall and frost both use the Northwest Alliance for Computational Science and Engineering, and they call that program PRISM, which makes no sense, of course. But PRISM is a climate group that measures both rainfall and frost. So again, specific data sources. Final peril that has a data source is the wildfire, and they use a burnt satellite index. And so they would know if a fire was burning within 25 meters of a crop, that would trigger coverage. Because even if its crop isn't burning, 25 meters away from a fire would ruin the crop from smoke inhalation or heat burn, whatever you want to call that. So even if the crop's not burning, if you're within 25 meters of the fire source, that would kick in a claim. So that's parametric crop coverage. I think we're on our last slide, Dana. I wanted to thank everybody. I know we've got a couple of questions in the chat. We do have plenty of time, it appears. So if there's a handful of questions that we don't quite get to, again, you can see my contact information on the bottom of the slide there, and happy to receive text messages off my phone, emails, whatever it takes to get all your questions answered. But I believe the first one was for Amanda. And I don't know if you can read these all, Amanda, but is there a symbol one offering if a contract requires it for your auto coverage? Multiple carriers, of course.
Typically, we only offer symbol 7, but this is something, if it is a requirement, I can always go to the carrier for approval to see if they'd be willing to write a symbol 1, but typically not.
Okay, thanks. We had a question about the carrier for the Parametric Crop program. It is an Italian-based company, which is why they have the flexibility to offer cannabis instead of just hemp. Generali is the name of the carrier, and they've been fantastic in terms of providing legit coverage. Sometimes they're slow because of the fact that they have a fair amount of activity, and we have the time zone differences, but and in one of my slides, I think I shared, sometimes it takes a 2 or 3 week lead time to make sure we know the weather pattern coming up here. But from a limits standpoint, the max is usually $75 million, but they say they'll go up to $100 million for a crop in a single location. We haven't seen anything more than $50 million to this point in a single field of crops, but happy to stretch the capacity of the marketplace. We have another question, I think from Matt. Did you see that, Matt? Lopez.
Yeah, the rating basis question.
Thank you.
So the rating basis would be conducted on 2 parts: the values at storage in the warehouse, and then the annual turnover, which typically would be associated with the sales. Now, depending on what the insured's doing, if they have a sub breakout of annual cargo transported, that may offer a better rating basis rather than just solely on their sales. But if you don't have that, we can just go off the sales.
Cool. In general, in the chat, we saw questions about the presentation. I'm not sure if everyone saw me respond, but we do have every intention of providing the slides today for everyone who's registered. And then additionally, questions came up about monoline coverage. And Cannasure has consistently offered up monoline coverage within all of our brokerage unit opportunities here. And of course, we're going to ask if there's the opportunity to provide the package quote, package coverage. So we're not leveraging like we've seen some of our competition do, but we surely want a fair opportunity to win the other part of the conversation. So if we start with stock throughput or we start with crime, we surely want to ask where's the other components of coverage, like our package, commercial auto, workers' compensation. We believe with all the marketplaces that we have here represented and the few that aren't represented today, it's the lineup of the best in terms of those who are supporting the cannabis industry. So I think you'll be happy with the markets that can come forward. Matt McNamara, we've got a crime question.
There is no minimum premium. Each risk is underwritten on its own. So short and sweet answer to that one.
That was a good one. Somebody asked a question about coming through Cannasure. Yeah, that's our expectation, that Cannasure will be your single point of focus for all submission activity. And then we'll reach out to our carrier partners who are on the line here and those that aren't. So if we had a conversation for cyber, as an example, that wasn't represented today, we would have you come through Cannasure to have a conversation with our cyber carrier partner. And the typical story is that most of the carriers represented here are wholesale market carriers. And Cannasure, obviously, in this case, is acting as a wholesaler on your behalf. And we will then represent your submission very fairly, work with the underwriters who are on the line here today, as well as those who aren't, to make sure that we're getting as broad of a coverage offering at the fairest price possible as we act as our brokerage unit does. Have I missed anybody? I think that's it. Unless I've missed someone from somebody else that I don't know.
There's one more question, Jim. Are all these coverage programs available in California? I could at least speak for crime, yes.
The answer is yes across the board. So in California, there might be an additional conversation for workers' compensation. We'd give Reigan, first crack at all opportunities here in California, but we know that that hasn't been Benchmark's strength to do modeling California. So we would complement Benchmark with another carrier partner if we needed to do that. But true as it relates to all other partners on the Zoom call today. All right. I think we're through them all. Team, thank you very much for your support and your knowledge drop today on our first webinar of 2022. We expect to have another one of these in about 30 to 60 days to speak to the new updates on Cannasure's MGA program, as we're looking to make some updates and enhancements. As you can imagine, we'll probably have another webinar like this about 30 to 60 days afterwards that brings through some other carrier partners on some other coverages that are as important to the world of the cannabis operator as were the first 5 that we had today. Like I said, we'll share with you all of these slides, and we truly appreciate your time. Everyone have a fantastic day, week, month. We look forward to connecting with you soon. Thanks all.